Everyone, we're here for the Q&A with our Chief Marketing Analyst, Lynette Zhang. And once again, as we always do on Thursdays, I have 3 questions here from our YouTube page. And we chose the best ones that we felt were, these ones are
not
really,
me. I had nothing to do with it.
These ones are really good. These ones are, some of these are very complex. And,
oh, good.
But
okay.
I think you'll know the answers to these ones. But
oh, good.
So she doesn't know, and I'm just going to read them to her, and we'll just have to see what you have to say.
Okay.
So, all right. So the first one is from SoCal Freelance.
Okay.
He asks, or she asks, I'm curious what a global currency reset looks like. What are the indications and warnings that it's about to happen? And what happens when it comes? Any historical references? So the very first part of that is I'm curious what a global reset looks like.
So what I'll say to that is that this will be the first time in history that we will actually have had a complete global system reset, although you might want to liken it back to the 30s because everybody was on the gold standard until after we went off, the U.S. went off the gold standard in I guess that was the 70s, and Switzerland was the last one to convert to full fiat in 78. So I guess it would be more the 70s. But they all started the transition to fiat. So they all went off the gold standard, early on, or started that transition until they concluded in the 70s.
Right, but
so
it still wouldn't have been a reset. It was more like a shift, I think, is what you've always said. In 1971,
it wasn't a full it wasn't a full reset. It was. We shifted from a gold standard to a debt standard. But always around any reset, there's a tremendous amount of chaos. So even if we think back to the 70s, what was going on then? You had the Vietnam War, you had the protests. My sister was billy clubbed at Kent State. You had the oil embargo, you had 37% official inflation, you had a stock market imploding, women's lib, the civil rights movement. And so they use these things really to distract you from the real intention. So while it wasn't
that's
a
an
full
indication,
set,
a warning, kind of, if
right.
there's a lot of chaos going on.
Yes, absolutely.
Okay.
Yeah. So that actually answers the
second part.
The second one. You'll see a lot of chaos. I think right now, though, too, because everything has been financialized, I really want to do a full webinar on that. But since everything's been financialized, these markets are really inside of a very narrow range. That means that they're super rigid. So all indications are, in my opinion, as a technician and a historian, is that we're very close. And what we're seeing right now in the markets with corporations coming out, they don't even make any money, and their market value is $35 billion, and they don't know that they're ever going to make any money. Even Amazon, Amazon drove a lot of companies out of business. They didn't have to make money. But if you're a mom and pop shop, you've got to make money. So when you see things that are super insane like they are right now, that they absolutely defy all logic, that's the indication.
Okay. So Scott Stewart asks, what do central banks do when they peg? Do they purchase other entities, currencies, or do they print money or something else?
Well, it's a combination of the two. But first they make a commitment to that peg. And I was actually pretty dismayed, something I would probably bring up next week in the news, that Iceland is now thinking about pegging to the euro dollar. So what they do is they make that commitment to maintain whatever that level is against that other currency. And then they either have to sell their currency, buy other currencies, etc., to maintain that peg. So they can look like their economies have to basically function really similar. Whatever country, like when Switzerland broke that peg, it was because the Eurozone was going to start their massive round of quantitative easing, printing a lot of new money, and they just couldn't afford it. So that's why they broke that peg. But yeah, when they do, they make a commitment to some certain level against another currency, and they have to buy and sell their currencies or the other currencies to maintain that.
All right, so Intix123 asks, if the Dow is made up of individual stocks, And yes, I agree, those certain stocks have run up too much. The question is, why did every single stock crash in 2007 to 2009 when the Dow crashed?
Oh, well, that's a really good question. So actually, yes, the Dow is made up of individual stocks, but what we've been going toward for a very long time are indexes, right? So what was happening was people were selling their mutual funds. The ETFs hadn't really fully kicked into gear yet, but the ETFs, those are more indexes. Fewer and fewer individual people actually own individual stocks. And it's not even every stock in the Dow that has run up. It's, some key ones like Apple or Amazon, etc. But when there is a sell-off, because I was there in 87, and I know what that looks like, and I know what that feels like. Exactly. And so when people panic, they just liquidate everything. And then if something drops, they get margin calls. If it was leveraged, then that means they have to come up with money, so they have to sell something else. So you might have a dog stock that you want to get rid of, but you may have to sell a better stock
to get rid of.
Right.
Yeah, that makes sense. And it sounds like what you're saying too is that because everybody is so much in indexes, they're selling off an index, it pushes everything down simultaneously.
Right. But on that side, you're presuming that there's a buyer. Okay, this next time, there are no buyers because back in 2007 and 8, the banks were still market makers, which means they would go in and put a floor underneath things, or at least attempt to. Well, they're out of that business now, so there's nobody to put a floor underneath.
Okay, all right. So that's all the questions we have for today. Like us on Facebook, subscribe to our YouTube channel, and we have a live webinar coming up on Tuesday, and that is about...
Well, that's about the pension crisis, but the real crisis. And I have to tell you, if you guys like this, you are going to love that, because I've been working on it now for a couple of months really hard. And you had a preview yesterday of it. I do think it's the best one I've done. And I always smile because I always think they're the best ones I've done. But that's because I never stop.
But they always get better. They really do.
They do. So if you like this, you're going to love that. It is really important that you see that. Share this information with everybody and keep asking great questions. They try to keep me away from that because it'll take all my time because I get obsessed.
Well, so we'll put a registration link for the webinar below this video, and we'll see you next time.
Bye-bye. Be safe.